All right, Chip Nellinger, Peter Meyer joining us again. Chip, we just had really this in-depth look at cattle prices and demand and just the cattle industry at NCBA's annual convention this year. Some optimism when it comes to cattle prices due to really the contracting herd across the country. Do you agree with that?
Yeah, I do. And I think the price strength early this week, was based off that inventory number. I don't think it was a shock. I think the market kind of expected those numbers, but not much has changed yet. We're still at risk of this drought ongoing into this spring, and some of these producers, unfortunately, out there in the far west, they just liquidated everything, and they're not coming back. So we've got some structural issues. Not with that being said, box beef this week, took a big drop. The beef demand is going to be tied to the economy and this inflation aspect. And so there is that risk out there. But overall, the numbers are supportive. I think that, we can expect some good things out here in the second, third, and maybe even fourth quarter. But we also have to keep one eye on this economy and what the Fed does with interest rates, and how inflation expectations are going to be set up into the last half of the year, because there is some risk with slowing world economy. If the Fed gets too aggressive here, that you throw a little cold water on it. So there are risks out there, but I'm supportive longer term, deep into 2022.
Yeah, speaking of inflation and the economy, Pete, after the Fed said, yeah, we're going to raise interest rates coming up, did we see money exit the stock market and come into the grains? Is that part of the reason that we are seeing this run in prices like soybeans?
I don't know. No, I'm never a believer in that money moving from equities to commodities. I think that the commodity money is separate. The commodity money from the start, whether you're buying, natural gas or crude oil. I mean, now all of a sudden we're getting to the point at $85, $90 where all the pundits are out there saying, oh, we're going to 100, we're going to 100, we're going to 100. Yeah, okay. Well, maybe we are. I don't know. But I think a lot of it has been, and we talked about this earlier, the soybean trade might also be something where traders are out there saying, you know what, let's just buy some soybeans kind of as a hedge against inflation, this and that. As far as the rate hikes are concerned, a bit surprised they didn't do anything last month. Certainly it would appear that they're going to do something in March. And I think what you've seen, the reaction has been in the equity markets, it's just been extreme volatility. I mean, this week, it's kind of calmed down a little bit, but last week it was just, all over the map. So I don't necessarily see money going out and going into something else as much as I just see some tremendous uncertainty. And I mean, today, this week we had Facebook earnings in the equity market, and Facebook lost about $250 billion in market cap just on a poor earnings quarter. So this volatility in the stock market is going to stay in place until such time where everybody feels comfortable with the Fed's intentions.
Chip, do you see any warning signs when it comes to corn demand? I mean, you look at, a contracting cattle herd, you look at some of the ethanol production numbers. Are there any warning signs right now that you think could be more of an anchor for corn prices?
Well, not that I see. To me, demand's kind of firing on all cylinders, right? I mean, we're cranking right along on the exports. Our ethanol has been strong and hitting the numbers that we need to. What you're asking, though, is there that potential black swan out there, something we don't know, and a bump along the road here somewhere out ahead of us? And that's always possible. Some of this is also, depending on the Black Sea area, what happens with the Russia-Ukraine situation. And I think, back to this inflation thing, that's going to be a big part of this too. And Peter kind of hit on that earlier. I think the Fed, it's obvious to me, they waited too long. They backed themselves in the corner. They painted the whole room and they're in the corner. And now it's a problem. If they say, we're going to hold back a little bit and maybe not raise as many times in 2022 as we said, because maybe the economy's slowing and the stock market's breaking, that's just going to pour gasoline on the inflation, play. And you could explode crude oil north of 100. You could explode beans to $16, $17, $18, not on fundamentals, just on inflation. However, if they're very aggressive and they're going to raise rates faster than expected, that could really throw some cold water on the inflation trade. So wild volatility ahead of us. Right now, I don't see much of a problem as far as the demand goes, but it's what we don't know that's going to hit us that's hard to predict right now.
Pete, strong crude oil prices usually means good news for ethanol demand. Are those two still tied together?
No. And the reason for that is, and we believe, I mean, look, Chip is right. Ethanol had a great run at the end of the fourth quarter, right? I mean, I can imagine that these ethanol guys were having the let's buy a private jet conversation around the water cooler. But guess what? You saw it this week. These inventories are enormous now as we go into February and March. So, I mean, it is somewhat tied in our opinion, though. You cannot discount these like Ford F-150 Lightning numbers and the electric vehicles that are coming in. Now we think that probably it's going to take until 24 or 25. So we see that ethanol demand kind of peaking and then just flatlining after that. Sustainable aviation fuel, maybe the next demand segment for ethanol. But, I always worry a little bit about the ethanol guys because they're kind of like the chicken guys. As soon as there's a profit margin in it, they just overproduce it. And I think that's what we're seeing. I mean, this week's pad numbers out there as far as ethanol stocks were concerned. I mean, they're higher than they were at the height of the pandemic in early 2020. So it's all right. Look, I get it. The ethanol guys need to strike when the iron's hot. They did, and now we'll see what they do next.
All right, Pete, Chip, thank you so much for joining us. Let's take a quick break, and we'll have much more right here on U.S. Farm Report.